Good morning for our viewers worldwide. I'm Manus Cranny in Dubai, Vonnie Quinn in New York. You're welcome to Bloomberg Brief. Let's set that agenda.
The risks are balanced for jobs and inflation. That's the call from Fed Vice Chair Jefferson. Minutes and a chorus of calibration voices to come from the Fed today. A potential breakup. The Justice Department mulls splitting Alphabet to mitigate the company's dominance in search. And if you stay, you'll die. The mayor of Tampa, Florida, warns residents as Hurricane Milton tracks towards the coast. We're live in Tampa later this hour.
Good morning to everybody. Check in on these markets, equity markets. What should they take away from the bond markets? We dip ever so slightly. Mark Hayfley at UBS say, get ready for a soft landing. The Mag 7 had a pretty stunning run yesterday, up nearly 2%. Alphabet at the bottom of your screen. We're trying to understand what's the next step from the DOJ. Will they break up Google? Will they break up the search business? That's the question that we'll ask during the next 60 minutes. These US markets are unbothered by the China stimulus. That's a view from Ed Yardeni. But position for lower rates, according to UBS. Roll it over and have a look at the bond market. We're waiting for the minutes today from the FOMC. We've got a smorgasbord of Fed speak. We're building up to CPI. Yields pop ever so slightly. We've got $39 billion worth of 10-year auction coming down the pike. The bid to cover on the 3-year yesterday was a little bit lighter. But Bank of America say anywhere between 4 and 4.25. This was 24 hours ago. You want to step in and buy duration here. So, Vonnie, this is the message from the bond market. JP Morgan say net shorts are the highest since April 2023. The bond market is nervous about gradualism.
It is front and centre, as are so many of the markets. So many potential catalysts, Manus, from, as you say, China sinking overnight to potential stimulus again from China at the weekend. And, of course, all of the individual stock names. You saw NVIDIA's rise yesterday. And, of course, we get into earnings season at the end of the week as well, Manus.
We do indeed. We have an unanchored bond market. Those are the views from Mohammed Al-Arian. But our next guest, Vonnie, is Mike Scott, head of global high yield and credit opportunities over at Man Group. And he weighs in on the reaction after the rate cut. This is the view. Markets enthusiasm following the Federal Reserve's rate cut overlooks emerging signs of strain among the consumers and companies. Mike is with us this morning. Mike, very first question. What is flashing amber for you? Or is it just a warning shot that you're raising a flag? Good morning.
Good morning, man. It's great to be here. I would say that, certainly we are seeing some degree of bifurcation with respect to the consumer. We do have a rather negative view of the middle to low end of the consumer space in the US, and we are starting to see cracks appear, not least given signs of delinquencies picking up with respect to sort of credit card delinquencies, as well as auto loan delinquencies too. So, in many ways, I don't think it's a clear-cut story as the consumer in great shape or not. I think it's much more nuanced, but certainly there are signs of strains appearing for certain segments.
Mike, when you have an event like the jobs report that Friday that really roiled the bond market, and we saw treasuries move quite substantially, a 30 basis point move at one point, do you have to regroup entirely and take a look at your portfolio and perhaps even swap out some, opportunities for others in the wake of that?
I mean, I obviously work in sort of high yield markets, which certainly have a lower sensitivity to the interest rate cycle, much more dependent on the business cycle. But nonetheless, I guess the jobs report certainly signaled a more healthy jobs market than some of the surveys. What I would say, though, is I wouldn't take one data point as gospel. We do think that the labour market is slowing. And certainly we are expecting some degree of normalisation as we continue through the back end of this year and into 25.
Mike, I have this vision of you in the high yield space like a praying mantis waiting for a better opportunity to enter the market. Al-Arian said yesterday, 24 hours ago, look, this is an unanchored bond market. You must welcome an unanchoring, a slight unanchoring in high yield. It creates better opportunity for you.
Yeah, certainly. I think that's a very interesting point. We do expect as we go through Q4 and certainly through 25, increased dispersion. I would say that certain segments of the market are are really rather expensive. I think particularly the more traditional cyclicals, whether you're looking at basic companies, materials, even areas like oil and gas, these are trading at some of the most expensive valuations relative to the overall market that they have done this cycle. So I would say that the market is certainly set for a soft landing. I think clearly the range of outcomes we think is broader and shouldn't be solely seen as a soft outcome. And we are looking forward to a period of higher dispersion, which we think is coming into view.
Are we about to enter a period where we'll see many more fallen angels, Mike? And to that point, if Boeing were to be downgraded, S&P has warned that now, would that be a company that you would be interested in, or is it too hot to handle?
I think when it comes to fallen angels, there's often a dichotomy between those businesses that are able to stabilize their credit profiles, and typically they can stabilize that in the sort of higher echelons of the high yield market, relative to those businesses that continue to hurtle through the high yield market and onto default in a number of years. I would say that from a stocks picking perspective, we do look at all opportunities that come into our market, and certainly it can be extremely rewarding picking up large companies that we think are relatively well contained within that higher echelon of high yield, and really look to build exposure from the volatility of that downgrade.
Mike, we're 26 days out from the election, and I just want to get a sense from you. A lot of people have said to us, look, Harris equals status quo for the bond, for a variety of markets. When I look at the performance of, let's say, the Trump basket in your world since the September 10th debate, I'm looking at energy, autos, all underperforming ever so slightly. Energy, autos, aero and defense, they're all just a little bit of underperformance. So is the market already beginning to position itself with the consensus from the polls?
I mean, I think that's a really interesting point. I would say that it's never as clear cut as either a Trump victory or a Harris victory. There can be a number of iterations, obviously, in terms of how the House swings. But certainly from our perspective, we do see that a clean sweep in either a red or a blue direction would certainly drive differing outcomes. And I think, as you pointed out, under a Trump scenario, we would expect, or a red wave scenario, we would certainly expect, a government that's pursuing higher tariffs and higher spending. And that certainly, we think, will have implications for areas like retail and, certainly other importing sectors that rely on goods produced outside of the US.
So are those the balance sheets of the companies that you're looking at right now, Mike, in order to get ready? And what have you teed up for a potential move in November?
So, as I say, we take very much a value-driven approach, and I would say that 70% of the high-yield market we think is relatively expensive. We tend to look for opportunities in where we can underwrite credit for through-the-cycle type valuations. And these are typically in areas where we're already seeing some degree of secular pressure. So in areas of the US, for instance, we see some still reasonable value in areas like broadcasting, media, telcos, for instance, and obviously real estate, which has been extremely topical over the past 12 to 24 months.
Mike, thank you so much. Looking forward to our next conversation. That is Mike Scott there of Man Group joining us in London.
Thank
you. Now to other top stories trending on the terminal this morning. Boeing shares dropping in the pre-market after negotiations to end an almost month-long strike collapsed. S&P Global Ratings warned it may cut the plane maker's credit grade to junk. Both the company and its biggest union laid blame on the other side for the impasse.
Couche-Tard sends Seven & I a fresh offer worth $47 billion. That's according to the Bloomberg sources. The Canadian company is still trying to take over the Japanese retailer after its initial bid was rejected. The new offer represents a 20% premium from the prior one, and Seven & I's stock price from yesterday.
And Rio Tinto makes a big bet on lithium. Despite the battery metals slump, Rio has paid a 90% premium to buy Arcadium Lithium in an all-cash deal worth nearly $7 billion. It's a step back into M&A for the world's second biggest miner and Rio's biggest deal in 17 years.
Coming up on the show, Google's antitrust problem. The Justice Department is weighing a breakup of the tech giant, Bonnie.
And later this hour, Manus, we speak to ADP's Nela Richardson on why economists were so unprepared for that surprise jobs report. Context matters on Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York, along with Manus Cranny in Dubai. The US is weighing an historic breakup of Google. The Justice Department may force Google to sell parts of its operations, including seeking to prevent the use of Chrome and Android to its advantage. Let's get more with Bloomberg Executive Editor for Technology in Europe and Asia, now Peter Elstrom. So, Peter, what exactly is the Justice Department asking for in this Google case?
So the Justice Department presented this 32-page document that lays out a whole range of remedies that could be used by the judge to address some of the monopoly concerns around Google's search business in particular. You'll recall that this judge ruled in August that, in fact, Google does have a monopoly in search, and it's been abusing its monopoly power in that area. So the Justice Department is laying out a series of potential remedies, including the most dramatic that you mentioned, perhaps breaking up the company, dividing search from some of the other businesses that it has. Also, in addition to that, they're talking about some behavioral remedies. So, for example, they may stop the company from using its Android operating system, the Google, the Chrome browser, to be able to direct traffic into its search business. You recall also that Google pays a lot of money to companies, including Apple, to make sure that they're using the search box for Google to generate a bunch of this traffic. Apple gets tens of billions of dollars from Google to make sure that people on their iPhones go to Google search.
Peter, good morning to you. I mean, Google say it's radical. It's going to have a series of unintended consequences for the consumer across the businesses. Look, how dramatic could this be? What's the kind of worst case scenario? Because we got to go back a long time in history to look at real teeth from the DOJ on a breakup.
You're right. The DOJ and the FTC have gotten much more aggressive here. You're probably alluding to the historical precedent here is really Microsoft, when the U.S. government went after Microsoft and talked about separating the Windows operating system or perhaps the Office business from the rest of their operations. In Google's case, you could see the search business be separated from some of these other operations, perhaps also the Android operating system, which is it's the most popular mobile operating system out there. It's very valuable in this mobile era to be able to direct people to certain websites, to certain services like the search business in particular. And also they've got a very big growing AI business that competes directly with OpenAI. So there are a few different pieces to this company that are very valuable. That's not even counting their moonshots, the really long shot investments in ambitious tech ventures.
Peter, how does this new filing now fit into this broader U.S. push to rein in big tech?
Yeah, well, as you allude to, there are many different investigations going on, at least 3 against Google itself in the United States. But also the U.S. government is going after Apple, partly because of its dominance in the App Store in particular. So Apple, Amazon, Meta, even NVIDIA, which has emerged as the dominant player in AI chips just recently, but already the Justice Department is looking at them and how they deal with their customers and how they allocate supply. So the U.S. government has had a couple of setbacks in their efforts, their antitrust efforts to rein in big tech. But so far, this one looks like it could set a precedent for some of these other efforts to rein in the power of big tech in a number of different areas that affect daily lives across the country.
OK, Peter, it certainly is a moment of reconciliation between the powers that be and big tech. Peter Elstrom tracking the Google Alphabet story. Coming up in the show, Milton charges towards Florida. Here's what President Biden said about the hurricane.
This could be the worst storm hit Florida in over a century. And God willing, it won't be, but that's what it's looking like right now.
lot of attention is being paid to the storm surge on the west coast of the Florida Peninsula, and rightfully so, because that's probably the most serious threat to people's lives and property. But this storm is going to go across the Florida Peninsula, and it's going to exit on the east coast of Florida into the Atlantic Ocean, likely still as a hurricane.
That was Florida Governor Ron DeSantis providing an update on Hurricane Milton. Now, the storm is expected to hit the state this evening. Here to bring us the very latest on the ground, live from Tampa, is ABC's Rena Roy. Rena, the latest on the ground, we've got the mayor saying that literally this is a catastrophic situation. Good morning.
Yeah, Manis and Vani, good morning to both of you. Well, I can tell you that about 6 million people across 11 counties here in Florida are under mandatory evacuation orders, with Milton now just hours away from making landfall. And you can see behind me that it has already started raining here early this morning. We are expecting that to get even worse, the conditions to deteriorate as the day goes on. Milton is expected to hit as a low-end Category 4 hurricane later tonight, bringing up to 18 inches of rain and a record storm surge of up to 15 feet here in the Tampa Bay area. It has the potential to be one of the most destructive hurricanes on record for the state of Florida. It is unclear where exactly landfall will be, but at last check, the path was veering slightly more south near Sarasota, and it is all hands on deck here. The governor says the National Guard storm mobilization is likely the largest in state history, with thousands of troops activated, and 34 search and rescue planes are on standby, and 37,000 linemen are either in Florida already or on the way to help with power outages. And some areas this morning are now extending evacuation orders further inland because of storm surge concerns there as well. Guys.
Well, that's just it, Rena. The destruction already expected to cost around $70 billion just around the Tampa Bay area alone where you are. What do we expect the breadth impact to be?
Yeah, well, we just got word a couple of minutes ago here that the hurricane is actually getting larger and the wind field is now widening. And those high winds are really the big concern here, along with the storm surge. That could be record breaking. We are expecting up to 15 feet of it here in Tampa, something that has really never been seen in recent records. Beaches, roads, businesses, homes, all of that could be destroyed, very badly damaged. This is expected to be widespread destruction.
Just very briefly, Rena, before we let you go, the evacuation by road, by air, that is mounting at pace.
Yeah, well, we have seen traffic really backed up for miles the last couple of days. Gas has been running out as well at many gas stations in the area. The governor had to bring in extra fuel, and the window is really now closing for evacuations. As you see, the conditions are getting worse, so time is running out for people to get out to safety before this makes landfall.
Yeah, really difficult conditions. Rena, thank you so much for that report. We really appreciate it. That is ABC's Rena Roy live from Tampa. Time now for our front page news, a look at what's making headlines around the world. And we'll start with the New York Times, which goes with Israel's defense minister postponing his trip to Washington in the United States. Yoav Gallant was expected to meet with his U.S. counterpart, Defense Secretary Lloyd Austin, to discuss Israel's potential response to Iran's missile barrage. The Pentagon played down any suggestion of tension between the two sides, leading to that postponement.
Next up, Washington Post. Trump secretly sent COVID tests to Putin. That was in 2020 when there was a shortage. It's according to a new book. Then the US president sent Russian president tests for his personal use. That's according to a book by the Watergate author, reporter Bob Woodward. According to the book, Putin told Trump not to tell anyone. Vonnie.
And on Bloomberg Manas, China's premier vows to listen to the markets in a bid to lift confidence. Li Jiang promised to listen to the so-called voice of the market when formulating economic policies. Investors are keenly anticipating more fiscal stimulus to add to recent measures. Of course, it didn't assuage the market in last night's session. Manas, we did see the CSI drop precipitously, but there is now a briefing announced for Saturday, and that might prop up some shares in the coming sessions. We do want to check Nvidia again as well, because of course it has a blistering 2 days behind it now, and it looks like in the early trade we're higher again today, up by 1.4%. This of course after Jensen Huang spoke in Washington DC, and after TSMC sales beat estimates as well. It's a good sign for AI chip demand. It's all coming together for Nvidia's stock price, which is at another record in the pre-market this morning. All right, we're going to get back to the macro environment in just a moment. ADP's Nela Richardson discusses uncertainty versus risk in the markets. And as you know, Manus, we're going to be hearing from many Fed speakers today, as well as that bond auction. So this market could look very different by 4 p.m. Eastern this evening. Do stay with us. Context matters on Bloomberg. From our global headquarters in New York, welcome to Bloomberg Brief. I'm Bonnie Quinn with Manus Cranny in Dubai. Let's set your agenda.
The risks are balanced for jobs and inflation. That's the call from the Fed Vice Chair Jefferson. Minutes and a chorus of calibration voices to come from the Fed today. A potential breakup. The Justice Department mulls splitting Alphabet to mitigate the company's dominance in search. And back to Cat 5. Hurricane Milton tracks towards Florida, expected to make landfall tonight. Vonnie, good morning. Counting down to the minutes.
Certainly counting down to the minutes, and to all of those Fed speakers that we'll have today. And that bond auction, of course, Manus, that you referenced, the 10-year. Let's just take a quick look at the 2-year yield at 3.95. We are hovering around that 4% mark. No major move in either direction, although plenty of volatility within a few basis points. Want to point to S&P futures. We are down very slightly. Google is weighing on the pre-market. Plenty of stories higher too, though. Don't forget, we're pretty much at all-time highs once again. We had that 1% rally yesterday. It was a little bit of a trepidatious start to the session, but certainly that's 2 big rallies now since that jobs data. And then crude is an interesting one as well, because we're back below $75 a barrel in New York, but we are up 0.9%. Couple of narratives weighing there. We have obviously the potential retaliation to come from Israel on Iran still. We don't know if or when that will happen or what kind of response it will be. And then there's the news out of China. We may get more fiscal stimulus measures. There's more commentary set for Saturday now. The equity market in China sold off. It wasn't too assuaged by that. But there is a little life to the oil market, partially on the idea that there might be some more demand coming out of China as well, Manus.
Look, 100%. We've got to balance that oversupply that everybody thinks is going to come next year. Vonnie, I think on the bond market, the bid to cover ratio on the 3-year paper was a little bit lighter. Today is the 10th. One interesting big piece from JP Morgan, the net shorts, their survey, net shorts in the bond market for the first time since April 2023. This bond market is nervous. 10s are over 4%. And the bond market is sending a message to the equity market that I think it's going to touch a cloth ears for. So it is a little bit short here.
Manus, I think we need a little comment from Stephen Major. He's there in Dubai, so you'll have to root him out before you leave Dubai, because he has said many times this year investors have had several times to actually, buy treasuries. Is this another one? All right, well, we have lots of Fed speak today. Just as expectations for rate cuts diminish, traders will be watching CPI out later this week as well for cues on the next steps. Joining us now is Nela Richardson, Chief Economist at ADP. So, Nela, you right that clarity is the antidote to uncertainty, but that if investors, companies and consumers are kept guessing on monetary policy, that uncertainty could lead to unwarranted economic stasis. What possibly could any Fed speaker say that will give this market any clarification, bearing in mind that you have some who feel interest rates are 100 basis points too high and some who feel they're 100 basis points too low?
Yeah, and good morning, first of all. And unfortunately, I think these numerous Fed speeches today will probably just add to this bubble of uncertainty around the next rate move. And uncertainty is a really important word to use here. If you think about everything that's happened just since that last rate decision, we've had these major catastrophic weather events that could be inflationary. Strikes, again, could be inflationary. focused on those log jams. We have the current election cycle. So the Fed's position on this is to provide clarity by committing to a policy action. I think that's what Governor Bowman was trying to get across in her dissent. Not that a rate cut was unwarranted, but it needed to be followed by a commitment to a rate path, and that's still missing.
Nela, good morning. Depending on who you listen to, it was an expensive insurance card. It was a little bit too much. This economy's running hot. You've got GDP running hot, the Atlanta Fed. If the Fed paused, what is the unintended consequence for the jobs market? Would it have an unintended consequence in a pause?
I think that pause would be read if it wasn't followed by any kind of future-oriented action by the Fed. What we saw over the summer, both in the ADP jobs report numbers and the BLS, they were on the same page, is a very slow summer of hiring that was then ramped up in September, right after that Fed rate cut, right after that aggressive action by the Fed. There seemed that it thawed the stasis that we were seeing in hiring. That stasis wasn't driven by bad economic conditions. It was driven by uncertainty. And that's why economists make such a big distinction between uncertainty and risk. Risk isn't unknown you can manage, uncertainty you can't. The Fed's role in this is to reduce the level of uncertainty by being clear about the next year, 2 years of where they see interest rates go.
Yeah.
Nela, CPI in the morning, it's looking like we're looking for a 1% gain month over month for September, year over year, 2.3%. What number would change this market's expectations again? So on either side, so, less inflation or way more inflation than expected?
Yeah, so for the CPI numbers, definitely any movement down is a good pace for us, especially in the core inflation, especially in shelter costs and services, which are really driving inflation right now. That's got to be balanced, though, by all the economic news events that we're seeing right now with the weather-related issues. But if you go back to that service inflation and to that blockbuster September jobs report, 254,000 jobs, I have to note that 3/4 of those job gains were from sectors that are not that impacted by interest rates: government hiring, leisure and hospitality, and healthcare. So the relationship between interest rates on the one hand and what this inflation report could imply and job gains on the other is not very closely tied together. And I think that's an issue for the Fed. They don't have the kind of mandate over the jobs market that one would think, given the aggressive rate moves.
But I think what is interesting, when you qualify those 75% of the jobs that were created, they did not come, according to your research, with hot wages. And that is critically important because a lot of people have talked about sticky wage inflation 2025.
Wages were not the problem when it came to inflation. They never were. That was the economists' worst fear, that increases would lead to this wage price spiral that never materialized. And what we saw is that hiring was strong, but companies didn't have to amp up wage growth. That being said, wage growth is higher than it was pre-pandemic, and that's being reflected in the BLS report. So we can't sleep on wages. They're still very much part of the Fed's decision-making criteria, but what we're seeing is more stability in wage growth than what the BLS report showed in September.
Nela, thank you so much for being with Vonnie and I this morning. That's Nela Richardson there of ADP with the aftermath of the jobs report ahead of the CPI. We are 26 days away from the US elections. Campaigns are having to deal with how the Hurricane Milton could affect voting in Florida. President Biden cancelled his trip to Germany and Angola this week to respond to the storm.
We're driving up preparedness for Hurricane Milton, which could be one of the worst storms in 100 years. I've spoken to all the political leaders in the region, some of them more than once, and I've told them anything they ask for, they can get. We've given, and we've gotten overwhelming response, positive response from everyone from the governors of Florida up to North Carolina.
Joining us now is Courtney Rosen from Bloomberg Government. The president there making clear the resources. There would be substantial resources, $137 million in federal funds, a lot of troops, and the administration ready to really help out where possible.
Good morning. I'll walk you through a little bit what President Biden is doing today to address the storm. At noon today, he's going to receive a briefing from his team about what's going on in Florida. At 5 o'clock, around 5 o'clock, he's going to make a speech, address the nation about how this government is responding to this issue, or to this crisis, I should say. That's about the same time when we're expecting the storm to make landfall on the west coast of Florida. Now, if you'll remember, President Biden is still cleaning up. The U.S. government is still cleaning up the southeastern United States from the last hurricane. And so that'll also be part of the discussions today, managing both.
What about the politicization of the hurricane, Courtney? So on the one hand, you have Governor Ron DeSantis reportedly not taking calls from the Vice President Kamala Harris on this. And then you also have Donald Trump suggesting that it might disproportionately negatively affect his voters.
Misinformation, disinformation is something we often see during disasters, and so that's not new. What is different is that this is being amplified by former President Donald Trump and also by Elon Musk. Now, the White House, I was sitting in a press briefing yesterday, the day before. They were very adamant about the need to tamp down misinformation about the amount of money that FEMA has to respond to these hurricanes. They were clear that they have the money that they need. Congress just replenished that fund. And so they're trying to spread the word on that. And another way they're doing that is by getting on Reddit. Yesterday, the White House began posting on different Reddit threads to try and address some of the misinformation that's percolating on that platform.
Well, Courtney, one thing, let's just pivot for a moment to the Middle East. We understand that Israel's Defense Minister Yoav Gallant, his trip was postponed quite abruptly. And today we understand Biden will talk to Netanyahu, and they haven't spoken since August. Just talk us through the choreography of this.
Well, another clue that these two men are not getting along is what's happening in public, of course, right? President Biden will say one thing about where they are on a ceasefire deal in Gaza, and you'll have Prime Minister Netanyahu shoot that down, right? Say that's not correct. And so even in the last couple of days, as we've commemorated the first anniversary of the attacks on October 7th, President Biden didn't speak to Prime Minister Netanyahu. He spoke to the Israeli president to share his condolences. We got an announcement from the White House that's usually customary of calling a foreign leader. So there's been a lot of tension in public, and we'll see what comes out of that call later today.
Long few days ahead. Courtney, thank you so much. That is Courtney Rosen of Bloomberg Government. And you can dive into Bloomberg's comprehensive analysis of all facets of the campaigns by typing ELEC GO on your terminal. That's ELEC GO. Context matters on Bloomberg. Well, one stock we're keeping an eye on today is Google. The US weighing an historic breakup of Google as a remedy in its monopoly case. The Justice Department may force Google to sell parts of its operations, including seeking to prevent it from using Chrome and Android to its advantage. Let's get more now with Bloomberg's Charlie Wells. So, Charlie, what exactly is the Justice Department asking for in this Google case? How dramatic could the changes be for Google?
This is pretty dramatic. So, earlier in the summer, we, of course, had that ruling from a federal judge about Google's illegal monopolization of search. And now we're getting to the point where the Justice Department is asking what they want, what the remedies they want here. And one of the more dramatic, of course, could be that breakup. Now, this calls to mind, of course, that 2 decades ago attempt by the government to break up Microsoft, which was unsuccessful. And, of course, Google's not happy about this. They called this move radical. It's one of several structural and behavioral remedies that were proposed. And it's interesting, right? So Daniel Ives, a senior equity analyst at Wedbush, said a breakup is unlikely, but Google is likely to be battling this for years. So that's the sort of analytical take on this so far.
Yeah, well, the cases are piling up hard and fast, aren't they, against big tech in general and not just Google. If we look at this broader context from this administration, this current administration, how does it fit in terms of the pushback? You've got deep regulation in Europe, but the US is the driver of perhaps law cases as well.
Yeah, Manus, I mean, tech is really starting to feel that squeeze. Of course, the DOJ sued Apple. They're circling other huge names. And some of this is political, but I think what's really interesting here, some of this is also technological, right? We are at what looks to be like a pivot point in AI. And I think when you get some of these technological advances, again, I mentioned that case, from 2 decades ago with Microsoft, that really was sort of the birth of the consumer internet, or at least the growth period for it. And again, are we at a similar pivot point with AI when we're starting to see concerns about how these companies, particularly from the DOJ, could use dominance to dominate these new technologies? So you get that political sense, but you also get the kind of technological sense as this evolves.
Yeah, well, you've got to have deep pockets. You just look at the $20 billion that they pay Apple every year to make sure they are front and center on those devices. Charlie, thank you very much. Charlie Wells, tracking the Alphabet story. Another stock that we're keeping an eye on today, it's Boeing. We've got a cloudy path forward for the plane maker. The wage talks, they've hit another roadblock. The COO saying that the workers make, quote, non-negotiable demands far in excess of what can be accepted if we are to remain competitive as a business. Now, while the union group says that the firm is, quote, hell-bent on standing on the non-negotiated offer. Benedict Cannell is tracking every nuance on this. It sounds as if, Benny, we're actually moving further apart than closer together on the remedy to this strike. What's the sticking point?
Yeah, you're absolutely right. I mean, we spoke here at the start of the week and things actually looked fairly good then. They were coming back together after a 2-week break. Negotiations were due to start again. And here we are, 2 days on, 2 sessions, and they've broken down. The two sides parted yesterday. There was a terse statement from Boeing. You've just cited from that. There was a response from the union. And both sides are sort of blaming each other. The Boeing side saying, you're making demands that we can't meet if we want to stay in business. The union saying, you're not really negotiating in good faith. These are demands that are too low. We want more than the 30% that are on the table. Boeing retracted those 30% wage increases, so it's unclear now how they will proceed. Will they come back with something that's even lower? Will they come back that's higher? We don't know at this point, but the pressure is building. Hours before the announcement yesterday, Standard & Poor's came out and said that they would possibly cut the rating to junk. That follows the other rating agencies. There's a lot of pressure on Boeing to get this resolved. A lot of money that's at stake here. And for the unions, similarly, we're in our 4th week now. They don't get paychecks anymore. Healthcare has dried up. So a lot of pressure from both sides to get back to the table.
All right, Benny, thank you so much. That is Bloomberg's Benedict Cannell for us in Berlin there. Let's turn to the world of private equity now. Our own Danny Berger spoke with Thoma Bravo's cybersecurity head, Seth Burrow, as the firm strikes a deal with cybersecurity firm Darktrace. She asked Seth Burrow about the environment for firms to go public, as JP Morgan's Jamie Dimon tells Bloomberg that policymakers have made IPOs more challenging. Take a listen.
It is very complex and expensive for companies to go public. One of the things that we deal with when we're thinking about taking a company public are the discounts that public shareholders require when a companies go public. And so that's something that we take into account. It's a long process and it's an expensive process. And it's also not one where it's one where it takes time for markets to potentially realize what we might consider the value of the company on day one. So we take all of that into account as we think about public markets. And I think he's right. I think Jamie Dimon is right that there's some changes that would need to be made to add some fluidity to those markets. And especially for very small companies, that process can be arduous and pricey. I do think that there is certainly the right national interest as it relates to the public-private partnership, with technology and the cyber industry. From a regulatory perspective, we don't think about it from that, perspective as it relates to building these businesses. Certainly I think that we have lived in a different regulatory environment from an M&A and antitrust perspective over the last few years. I think you've seen that impact deal volume and velocity. It's not impacted, our ability to do what we need to do to build companies and to innovate and create these best-of-breed vendors.
It's been a strange time for private equity as rates have gone higher. There's been some kind of gumming up of the system, some slowing of M&A. To what degree does a 50 basis point cut from the Fed just weeks ago reawaken animal spirits? Have you seen any impact to deal flow or activity in the market?
It's relatively small. And so over the last year, when we look at what it cost, our cost of borrowing, it's probably all in 100 basis points better, including that 50 basis point rate cut that just took place. That, for us, is not that meaningful. Most of what we're buying is heavily financed with equity. Maybe 30% of our capital structures might be debt. And that's true for most people in and around at least the technology sector, which tends to be much more of a growth buyout sector in private equity. So I think that it's helpful on the margin, but it's not a meaningful enough change to really unleash any sort of meaningful difference.
Seth Morrow there, the managing partner at Thoma Bravo, speaking to our very own Danny Berger. 50 basis points didn't change the needle to the animal spirits. Coming up on the show with Vonnie and myself, all eyes on the Fed. Many officials are speaking. You're going to get a chorus of Fed speak. And, of course, the minutes. Context matters on Bloomberg.
This is Bloomberg Brief. I'm Vonnie Quinn in New York, along with Manus Cranney in Dubai. Now, let's take a look at what's ahead just today. Another Fed speaker marathon coming your way. We have Bostic, we have Logan, Goolsbee, Jefferson, Collins and Daly all on deck throughout the day. Plus, the two-year Treasury will sell $39 billion worth of 10-year notes. That takes place at 1 p.m. Eastern. We'll be watching those results. And, of course, the latest Fed minutes set to be released at 2 p.m. We think we know everything already, but there might just be more to glean, Manus.
There's always something to glean from those FOMC minutes. Check out NVIDIA on a barnstorming run to the cash close last night, up 13% over 5 sessions. We're bid this morning. I can tell you this, once you've accounted for the stock split, $135 is that record high that we hit in June. Keep an eye on that. You got Reddit, Jefferies initiating the stock with a buy recommendation, citing a backdrop of generative, you got it, generative AI providing the opportunity. And Arcadium Lithium, Rio set to buy Arcadium Lithium for $6.7 billion. With the biggest deal since 2007. Vonnie, it's been great to be together. It's all about the bonds today.
Exactly. Much more volatility ahead, I think that's for sure. Manus, thank you.